What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. I'm sure you all remember the GameStop saga from last year. The stock increased almost 20-fold in the early months of 2021, bagging huge gains for retail investors and huge losses for short-selling hedge funds. Most of the meteoric rise in share price was due to technical reasons. Hedge funds shorted more than 100% of shares. That made the stock a powder keg ready to explode higher when individual investors started buying in. But beyond the technical aspect, there was also legitimate optimism about activist investor Ryan Cohen's plan to stage a turnaround at the company. Cohen is a billionaire entrepreneur who founded the pet-focused e-commerce company Chewy. He bought a roughly 10% stake in the company and was subsequently appointed chairman of the board as he attempts to implement his turnaround plan. While they have made significant efforts and replaced a lot of GameStop's senior management team, progress has been slow. If you walk into one of their retail locations today, it is almost indistinguishable from how it was before Ryan Cohen came on the board. The lack of visible progress caused investors to lose patience, and the stock declined by 75% from its highs over the past year. It looked like the GameStop story was finally running out of steam. But this all changed in mid-March of 2022. The stock started a 10-day winning streak, which saw its price more than double from $78 a share to $190. The catalyst was news that Cohen purchased an additional 100,000 shares of the retailer. This indicates that he still believes that his turnaround initiatives will bear fruit, and he took advantage of the relatively low share price to increase his upside. After the recent purchases, his stake in the retailer has increased to 11%, which is worth about $2 billion at current prices. In this video, we'll go over why Ryan Cohen bought more shares, what his turnaround plans are, and whether they'll be likely to succeed. GameStop is the world's largest video game retailer, selling new and pre-owned video games and consoles. Throughout the 2000s and early 2010s, they were a highly profitable business and became the go-to destination for gamers around the world. However, in recent years, there's been a massive shift to people downloading their video games directly to their consoles or computers, thereby disintermediating brick-and-mortar retailers like GameStop. Since about 2017, GameStop's revenue has been on a clear downtrend, and they went from being highly profitable to posting net losses in most quarters. By 2019, things had gotten so bad that they hired the Boston Consulting Group, or BCG, to make a turnaround plan for them. Unfortunately, BCG's business proposal ended up being pretty worthless, and GameStop refused to pay them the $30 million in consulting fees. Cohen thought that GameStop was an incredibly valuable franchise, but was being grossly mismanaged by the existing senior executive team. In November of 2020, he sent an open letter to the company, saying that they needed to immediately conduct a strategic review of the business and transition to a digital-first technology company. If anyone has expertise to transform GameStop, it should be Ryan Cohen. He founded the pet-focused e-commerce company Chewy, which has seen tremendous success in recent years. Chewy has been able to triple its revenue over the past 3 years by pioneering the e-commerce industry for pet products and becoming a leader in logistics for heavy items such as dog food. By all metrics, the company has been a tremendous success and is now valued at $20 billion. But it's unclear how relevant Ryan Cohen's Chewy experience is to GameStop. Pet products are physical and need to be purchased either from a brick-and-mortar retailer or ordered online. Video games are different. GameStop's main problem is the direct downloading of video games from the Xbox Live, PlayStation, and Nintendo Online stores. While Cohen does plan to revamp the retailer's e-commerce operations, he is aware that this has limited growth potential. He has thus thought of a completely new business venture which promises to keep the company relevant in the increasingly digital video game industry. Before we get into the details of Ryan Cohen's new plans for GameStop, a quick word from today's sponsor, Private Internet Access, or PIA, which is my VPN of choice. If you're not familiar with VPNs, it stands for Virtual Private Network, and it's almost a necessity these days. When you use PIA, your traffic is securely routed to one of their servers around the world. Once you connect to one of their servers, your IP address is hidden and your data is encrypted. This protects your identity and keeps your data away from spammers. Also, you can virtually change your location to any of the 75 countries that they have servers in. This allows you to bypass geo-restricted content, such as when you're watching Netflix or other streaming services, or access websites that are blocked in your country for whatever reason. They have over 20,000 servers, which means that you always get fast and reliable internet access. You can even use one subscription to protect up to 10 devices at the same time. Signing up for private internet access is risk-free, as there's a 30-day money-back guarantee. They've partnered with us to give viewers of this channel 83% off, plus an additional 4 months for free when you use the unique link in the description below. This equates to just $2 per month to protect yourself online. And now back to the video. In February, GameStop announced plans for a new NFT marketplace. NFTs, or non-fungible tokens, are a blockchain-enabled way to verify ownership of virtual assets. Many believe they'll become increasingly important in the world of video games. Today, many video games sell in-game items such as skins, weapons, and various special items. The idea is that these in-game assets will be eventually transitioned onto the blockchain and be transacted as NFTs. This would make it easier for gamers to buy and sell them amongst each other, and increase the general excitement within the community. GameStop partnered with 2 blockchain companies, Immutable X and Loopring, to make their NFT marketplace a reality. They plan to launch the platform by the end of this year. To kickstart interest, GameStop established a $100 million investment fund to provide capital to video game developers who join the platform and create NFTs. This is a massive incentive to bring developers on board. At this point, they haven't given many details about the platform or how they plan to monetize it. Presumably, they would charge some sort of transaction fees on the NFT trades. One massive advantage that GameStop has is its rock-solid balance sheet. They took advantage of the high share price over the past year to raise over $1 billion by issuing new shares. Today they have $1.3 billion of cash on hand and almost no debt. This gives them a financial war chest to do things like the $100 million developer fund that other startups simply wouldn't have the means to do. But at this point, all of this is speculative. It's unclear if they'll be able to sign on AAA game titles like Call of Duty or League of Legends onto their platform. In fact, it seems rather unlikely. Microsoft is focused on developing their own metaverse offering, and they say that this was a key motivation for their massive $70 billion acquisition of Activision Blizzard, the developer behind the Call of Duty franchise. To the extent that video games transition their virtual assets to NFTs, there's no particular reason that they should use the GameStop platform. They would rather build their own platform and keep the revenue for themselves. GameStop has $1 billion to invest in their offering. Microsoft has $125 billion of cash on hand. They also have the advantage of owning the Xbox platform and dozens of major game studios. That puts them in an infinitely stronger position than GameStop, especially if their acquisition of Activision gets approved. The fact of the matter is, there's really not a huge reason that GameStop even needs to exist anymore. Similar to how streaming services spell the death of Blockbuster Video, the digitization of video games is an existential threat to GameStop, and there's not much they can do about it. The video game giants Xbox, PlayStation, and Nintendo have spent billions of dollars to make things like Xbox Game Pass, which give them a direct relationship with gamers and cut out middlemen like GameStop. So while the NFT marketplace is an interesting idea, it's probably not going to be the silver bullet to save the company. While we're waiting on this new NFT platform to launch, GameStop's core business is continuing to deteriorate. For the 4th calendar quarter of 2021, they reported a net loss of $147 million. The 4th quarter is usually their strongest quarter because of high sales during the holiday season. The fact that they reported widening losses in their seasonally strongest quarter is cause for concern. Part of this is because they hired a lot of former Amazon and Chewy executives, as well as new software engineers. While these new hires could help them with their digital transformation, GameStop had to pay them high salaries to convince them to join. They have $1.3 billion on the balance sheet, but they could burn this pretty quickly, especially as they ramp up investments in their NFT platform. The good news is, with the recent rally in the stock price, they can easily fund their losses by issuing new shares. It's not an exaggeration to say that retail investors gave GameStop a second chance at life. Despite the risks, there is some positive probability that the NFT platform will be a success, given GameStop's strong brand. Retail investors are basically funding this new venture by continuing to buy and hold their GameStop shares. It remains to be seen if these investments will bear fruit. Alright guys, that wraps it up for this video. What do you think about GameStop's proposed NFT platform? Will it allow the company to stay relevant in the world of digital video games? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.